All right, welcome back. Let's do some of your questions now. Joe, you get the first one from Jeff in Boca Raton, where you're going today, right?
Yes.
All right.
Boca, baby.
If you run into Jeff, maybe he can ask you again about another stock in person. But let's talk the medical devices ETF, IHI. It's on a tear. Is it too expensive to buy now? That's what he wants to know.
Valuations for the medical device companies, yes, they are high based on 5- and 10-year metrics, but I think it's warranted. The medical devices tax has been on hiatus. The expectations are it does not return in 2020. In the last 5 years, 7 of the top 10 S&P 500 healthcare performers, they have been medical device companies. It's almost a way to play against a recession, low growth, and the political narrative right now that seems to be holding back performance in a lot of the healthcare names.
All right. People of Boca, look out for you later today. All right, Michael in Charlotte, North Carolina, for John, on semiconductor. What do you do? Hold it or sell it?
I'm still holding it, Scott. I've taken profits because that's one of the things I do, you know, if an option doubles and so forth. We were talking about this one, I think on halftime, maybe even back in middle of September. It was under $20 a share. It's pushing towards 24 right now. I like it. I think they're doing just about everything right. And they gave us positive guidance just in their last report recently. So I like it.
All right. Steph, Mary in Canada wants to know about Emerson Electric. And it's not about buying it. It's sell it or hold it.
Oh, don't sell it. Definitely hold it. They have a catalyst coming up, a restructuring day on Valentine's Day, actually. And they're going to make all kinds of announcements about restructuring their operations. And I think that will be a catalyst into that meeting. Maybe you trim some after, but I like it into that meeting.
Okay. Court, for you, from Lou in the great state of New Jersey.
Oh.
Blackstone, should I buy it now?
Absolutely, you should buy it now. I think that Blackstone is a name that I personally bought, back when Steve Schwarzman changed the structure of Blackstone. But the reason why you can still buy it now, even up as much as it is where the inflows are going from institutional investors right now into this space. They're at all-time highs. Blackstone is highly diversified, very well run, and very poised and positioned to continue to grow into the future. So it is a name that if you're allocating to financials, I love asset managers, particularly with alternatives, as we know. This is one I love.
Okay, thank you. Rob Sechin for you from Par in Boston. Any thoughts on the biotech M&A surge in recent weeks?
So, yes, I do. One thing that I would say, just backing up, biotech is a space you own, but you have to understand the pipelines in litigation. We owned it earlier in the year on a sell-off. It had a 25% price appreciation. It gave all of it back. It's come to the front burner again, partly because of drug price reform fading, but also because of M&A activity. I can think of Bristol and Celgene. But let's remember, M&A activity is often viewed as something that happens from a position of strength, but it can also be because of stagnation in the pipeline. So I think it's very idiosyncratic, it's very specific to the company, and you just want to be careful. I think you're going to see more and more of this as long as you don't see a lot of this reform jump to the front burner again.
Okay, thank you for that.